would say that about me. I definitely look on the bright side of things, but I'm also a realist. So I don't think of myself so much as an optimist or a pessimist as a realist. I'm an analyst, and we have a lot of proprietary techniques, and we have a lot of ways of analyzing markets that are different from Wall Street, thank goodness, because Wall Street usually gets it wrong. The Federal Reserve usually gets it wrong. They have the worst forecasting record of anyone I can think of. We do a lot better than that, but the key is realism. You can't engage in wishful thinking. You can't imagine the world's going to be the way you want it to be. You can aspire to that, and you can try to make it happen, but the world doesn't always agree. So I would say realism, number one. Number two, I put a big emphasis when it comes to, certainly what I do with my own money and investments and so forth, on the power of diversification. And it sounds obvious. Everyone's like, oh yeah, diversification, that's a good thing. Well, it is a good thing, but people don't really understand what true diversification is. So for example, I run into people and they say, well, I'm fully diversified. I've got 50 stocks in 10 different sectors. I've got semiconductors, consumer non-durables, consumer durables, technology, mining. And I say, you're not diversified. You may have 50 stocks in 10 sectors, but you've got one asset class, which are stocks.
Exactly.
And they're correlated to a greater or lesser extent, but generally the more you want them to be uncorrelated, the more correlated they are. In other words, we call it conditional correlation. The time when correlation goes up is when the market's under the most stress, or either rallying together or falling together. So 50 stocks, good luck. People say to me, Jim, you own a certain amount of gold. How do you sleep at night? I say, you're all in stocks. How do you sleep at night?
Exactly.
So the key is diversification. There's a place for stocks, absolutely. There's a place for gold, and there's a place for other assets as well. And we'll talk a little bit more about that.
So why don't we dive in there? I think this is a question that anyone at home right now is wondering. What are you doing personally? And again, only share what you want to share here, but what do you do personally when you're looking at wealth or investing? How are you diversifying in that sense?
Sure. The way I think about it is, if I said, look, we're absolutely going to have inflation. It's going to run away and be here for a long time. It would be really easy to design a portfolio. You'd have gold, you'd have real estate, and other hard assets, maybe natural resources and so forth. If I said, you know what, Matt, there's going to be deflation. We're going to flip from inflation to deflation, and that's going to be the problem. Again, you would know exactly what to do. You would have bonds, you would have U.S. Treasury notes, you would have some utilities, et cetera. You would have cash. Cash, believe it or not, can be your best performing asset in a deflationary environment, even though you're not getting any yield because the value of the cash itself goes up in terms of purchasing power.
Yeah.
But what if I said, the world's a lot more complicated than that. We're in inflation now. We could flip to deflation. We could flip back again if there's more government stimulus, fiscal policy, et cetera. We're in a world where both things are true and we're flipping back and forth. How do you design that portfolio? Well, the answer is what I call the barbell strategy. You have some inflation protection, you have some deflation protection, and then the barbell, the thing that connects the two ends, is the cash. So let me explain kind of how all that plays out. So just my own portfolio for inflation protection, I have some gold, but gold and silver, but I recommend that's a 10% slice. Don't be 50%, don't be all in, don't be 100%. That never makes sense. There's no asset, however attractive it might be, where you should be over allocated, just in case you get it wrong. I mean, you got to allow for that. So, so a 10% slice for gold and silver. I have a large slice of cash, maybe as much as 30%. And people say, well, cash, it doesn't have any yield. I don't want any cash. Well, the answer to that is it doesn't have much yield, but it has a lot of other qualities that are really good. Number one, it reduces the volatility of your overall portfolio. Cash is the opposite of leverage. Leverage increases the volatility, so you can double your returns, but you can also double your losses. With cash, you're not going to gain or lose very much, but if you have other volatile assets, so you've got some gold, you've got some stocks, these things are kind of going like this. With the cash in the middle, the overall volatility comes down a little bit, so you can sleep a little better at night. Cash is also a good deflation hedge, but the most powerful aspect of cash, and this is not well appreciated, but it really is important, is it gives you optionality. In other words, if everything falls apart and prices crash, which I expect they will, there comes a time when you're ready to go shopping. It's like, okay, all these great companies are down 60%, 70%. now's the time to buy. Well, if you don't have cash, you can't buy.
Yeah.
You're licking your wounds from losing money on the other things, but the person with cash can go shopping. By the way, no better example of this than Warren Buffett.
Yep.
Warren Buffett, Berkshire Hathaway, has over $120 billion in cash.
Yeah.
He's supposedly the greatest stock investor of all time. Why does he have so much cash? Well, he can see this coming, exactly what I'm describing.
Yeah.
Yeah, there's room for stocks, but there I would favor energy stocks, natural resources, because those are sectors that are going to go up a lot more. Definitely real estate, not commercial real estate. It's too soon. We're not off the bottom in commercial, but residential real estate, farms are a form of real estate, income producing real estate. And then there are good opportunities in private equity, not private equity or venture capital. It's a little more difficult because you have to be a qualified investor. But I think a lot of our readers are in that category, and you have to be very selective. Know the promoters, know the management of the company, but there's a role for that as well. And again, I like natural resources, water, energy, and so forth. So I would say, not just say, this is exactly how my portfolio looks. There's some gold and silver, there's some real estate, there's some cash, there's some private equity, and there's room for publicly traded equities as well.
Absolutely, and I think that's important. I mean, that's what we want to do here at Paradigm Press, and through your letter, Strategic Intelligence, is just bring more education, more investment awareness, more wealth awareness for our readership, and that's important. I think a lot of people don't think that cash that way. You need cash to spend. You need it as dry powder if the markets go down. Let me throw another question at you. I know personally you own a solar farm.
Yes.
So tell me about how that fits into this diversification, or is it sort of an outlier? How does that work?
Well, it's sort of a diversification in terms of survival. I built the largest solar module array, non-commercial solar module array in New England. And I know that because there aren't that many contractors who do it. I should add off-grid. So the largest off-grid, non-commercial solar array in New England. It's a pretty big one. And again, my contractor told me that because they're one of the few people who build them. And everyone's like, "Oh, isn't that wonderful, Jim? You're all in on the Green New Deal and reducing carbon emissions and all that." Well, first of all, I'm not. I mean, I think the Green New Deal is a scam. We can talk about that separately. And if it reduces carbon emissions, that's fine. I'm all for that. And I have, quite a few acres of trees. So between using solar power and owning trees, I probably have a negative carbon footprint, so I don't put up with any stuff from Greta Thunberg or any of these other phonies. But I did it. If it saves the environment, that's great. But that's not why I did it. I did it because I'm concerned about the grid itself. And if that sounds far-fetched, just look at the headlines and look at what's going on in California right now. Rolling blackouts. Please don't charge your EVs. Let it go to your EVs do if you can't charge them. Colorado, they've taken over thermostats. People I got this really cool thermostat as part of the Internet of Things. It's like, yeah, if you can change it remotely, so can somebody else. And the government's actually going in and capping the thermostats, or putting a floor under them rather, at 79 degrees, so you can't use the air conditioning.
Yeah.
But you have no control over it. So, so all these things are because of the grid, because of the failing grid, partly because of very misguided Green New Scam policies. So I built my solar array, the solar module array, so that we could be off grid.
Yeah. And that's a good point. I mean, another way to look at it is, I know we write about freedom and not being censored and all that kind of stuff, but like freedom in that sense, if you don't have electricity or you don't have energy, what good is the freedom at that point? So if the grid goes down or if something's getting throttled from an energy company or something you can't control, that's a cool way to think of diversifying as just as a human, getting energy to create that freedom that we all want and love.
Right.
Here's another question from you, and again, go wherever you want with this one. But how do you think about income? Because when I know you, right, super successful at our business. I know in the past, luckily we don't have to pay this, but in the past, you have a speaker fee. If you're speaking somewhere, it might be $25,000 for this fee. You're a wildly successful New York Times best-selling author. You write your own books. Talk about income. Like, how does income affect your decisions and your wealth in general?
Right. Well, you have to consider the source. And one of the things about writers, you get paid royalties, which is great. And so We have had some success in the newsletter industry and the book publishing industry, but it's very lumpy. You get it when you get it, and it's great. But it really puts, it's not like a regular paycheck. It doesn't come in once a week or every 2 weeks or whatever. But that's fine, but it puts a burden on you to manage it prudently. And that's why I keep a larger than average probably allocation to cash, because I have to manage cash. It's one way to think about it. But but to me, the thing, your income is what it is. Everyone's on some kind of budget. You have to look ahead. But you have to consider, if you have a business, or let's call it a regular job, all fine, you might have started your own business. Your income is only as good as the prospects for that business or the prospects for the job. Things can change, and that's where I find a lot of people get off track. You make a certain amount of money, and like, oh, I'll always make that much money, so I'll live a kind of lifestyle that would be the basically capitalize the cash flow. And that's how rich I am. Well, first of all, that's not how rich you are. You got your income and your property, and that's it. But more importantly, things change. I've had some success, but I've also had some crash and burn situations. I think our readers know I negotiated the bailout of long-term capital management, but I was all in with that with my partners. I lost quite a bit of money in that, and came back from that. But that was the kind of thing where, when it all goes away just like that, or a lot of it, are you robust to that? Are you prepared for that? So I would say, don't take it for granted. Constantly evaluate your business, constantly evaluate your job. How's your employer doing? It's wonderful for everyone if they have good sources of income. But the best advice I can give is, don't take it for granted.
Yeah.
And kind of, it sounds like a cliche, I guess it is, but save for a rainy day.
Yeah. And one other story, I mean, just diving into that same topic, you've told this to me before, and some of the readers might know it, but your dad owned a gas station, right? That was another story that was, like there were forces beyond his control.
Sure. My dad worked hard. He had 2 jobs most of his life, sometimes 3 jobs. And I don't know when he slept. I guess he would squeeze it in when he could to support the family. I do remember he did have a gas station. I remember at the time gas was 19 cents a gallon. Not like, oh, I remember when it was $1. Well, I remember when it was 19 cents. But it was in the early 60s. He was an independent. There was a price war. So you're up against Esso at the time, now ExxonMobil, and Hess is a big gas station in New Jersey at the time. And so that got into distress. And so we went through a bankruptcy. And in those days, bankruptcy was a lot tougher than it is today. They took away the car. We had to sell our house. We moved into a fishing bungalow. The rent was $35 a month. We had 8 people in a 2-bedroom bungalow. Try that sometime. Yeah. But our strength was we held together as a family. So that's when you realize that there's more. Well, hopefully we all realize this, but sometimes it gets lost in the shuffle. Your greatest source of strength, money is great, wealth has a place, but it's really your family, and then your education. And I remember, I said we had 8 people in a 2-bedroom bungalow. Well, that was true. I didn't get a bedroom. I got a porch. It was pretty windy in the winter, and the wind would kind of blow through. It was cold. And there was no closet, so I took a hammer and nail, and I put the nail into the wall, and I had a hoodie at the time. I hung my hoodie on it, and that was my closet. But it was sort of like, the scene with Scarlett O'Hara in Gone with the Wind, when she comes back to Tower and it's all been burned to the ground and there's no food, and but she makes a vow. She goes, it's a very dramatic scene. I will never be hungry again, and she carries on, and she rebuilt and was quite successful in the movie. So I remember thinking to myself, okay, here we are. Here I am. I was 12 years old. I didn't blame anybody. I didn't blame my parents. I didn't blame myself. But I assessed the situation, and I said, well, okay, I got a nail in a wall and a porch and a fishing bungalow. Where do we go from here? And I said, the key is education. I'm not going to, win the lottery. A lot of things that people count on, we're not there. But that doesn't mean you feel sorry for yourself. You say, okay, what's the way out? And for me, it was education. And I just, buckled down, got good grades, got into college. So I don't have to recite the whole story from there. But so what's your foundation? Well, your foundation, again, your family, your religion, sticking together, and education is a big boost. So that's, the story goes on from there. But that's, I think it's important to keep that perspective in mind.
Yeah.